It's Friday, June 26th. I'm Brian Walsh, and welcome to This Week in Impact, where I talk with ImpactAlpha journalists and editors about some of the most interesting impact investing stories we've been covering. This week, I'm joined by editor Jessica Pothering. We'll discuss how Zambia, a country known for big mining, is turning its attention to small business as a pathway to inclusive growth. Plus, how SpaceX and Anthropic IPOs are set to unlock billions in liquidity for impact-focused LPs. And finally, this week's Deal Spotlight shines on investors designing nature-based investments around natural cycles. That's all coming up on This Week in Impact. Hi, Jessica. Welcome back to the podcast.
Hey, Brian. It's been a minute. It's great to be back.
And we're switching things up this week with you in Massachusetts, where I am often based, and me on the Iberian Peninsula, where you are usually based.
Yeah, how are you doing with that heat wave?
It's been delightful here. Fortunately, my hotel has good old American style, very high intense air conditioning, which I'm a big fan of.
Right on.
All right, first up this week, how some investors in Zambia are mounting a multi-pronged push to focus on small and growing businesses through a central bank anchored financing initiative, an angel investing network, and a diaspora-focused private credit fund. Now, Jessica, Zambia has copper, cobalt, and now the attention of Bill Gates and Sam Altman, but most of its wealth flows out of the country. As our Lucy and Gigi wrote this week, Zambia is trying to change that. So Jessica, what's actually different about what's happening now with small business finance? And why should impact investors be paying attention?
Lucy was on the ground in Lusaka, Zambia's capital, a couple of weeks ago at the Africa Impact Summit, talking to a number of different people about impact initiatives that are taking shape locally. And what I thought was really interesting about the reporting that she did there is it sort of built on some trends that I noticed when I was attending the Mining Indaba conference back in February. Of course, as you alluded, Zambia is a big mining country, so they were very present at that conference. It was, I think 12,000 people there in Cape Town in February when I was there. And the president of Zambia gave a speech talking about how mining is about empowerment, it's about equity, it's about shared prosperity, and the government is trying to reshape this new push for critical minerals to be more localized and to ensure that local businesses and local communities benefit rather than past waves of mining expedition that have really primarily been foreign companies and foreign governments going into Africa and extracting the wealth and not leaving anything behind for the locals. And so Lucy's reporting kind of builds on that by going deeper into just, the broader small business community in Zambia. And she unearthed a number of initiatives, some of which are government-led, some of which are private sector-led, some of which are quite grassroots, that are just kind of hitting at how do we shore up this core segment of our economy in as many ways as possible.
Let's break it down piece by piece. So let's start with the government's play. The Bank of Zambia is anchoring a new initiative there. What's that all about?
Right. So to me, this sort of builds on what the Zambian president is trying to do with the mining sector, where he's trying to formalize small mines and make sure that small businesses that are supporting the mining sector get bigger business by sort of requiring that mining companies that operate spend at least 20% of their procurement budgets locally. And so in this case, what the Bank of Zambia is trying to do is support that broader base of small businesses. And it's doing it with this, it's providing catalytic funding to a new finance facility that's being developed by the Zambian National Advisory Board for Impact Investing. It's called the Small and Growing Business Initiative. And it's going to be this sort of multi-pronged financing instrument. Some will focus on debt, some will focus on equity. And the Bank of Zambia, which is the country's central bank, is providing $260 million that would effectively be, it's a pot that's available to regulated commercial banks, and it would just provide low risk, kind of risk buffering capital in order to incentivize them to do more of their own lending to small businesses in the country.
So the idea there with the Small and Growing Business Initiative is to use first loss capital to crowd in commercial capital from commercial banks in the country, that therefore lowering the cost of borrowing for small businesses.
Exactly. And this is an approach you see actually with a lot of development finance institutions that are hoping to incentivize commercial banks in this way to support African small businesses. Just many commercial banks are really reluctant to do it because it's intense underwriting, often for very small checks. Small businesses are seen as risky. And so that incentive structure coming from the government is sort of sending a powerful signal that this can be done in a risk mindful way.
And what's the exit strategy here for that small and growing business initiative?
Oh, well, there's also they're planning to do an equity fund of funds as well, in addition to this debt facility, and that would be a pot of money that is invested in venture capital and private equity funds, and that part would, I believe, be spun out eventually as its own independently managed fund. I think there's a short list of fund managers that are being looked at to take that over. But for now, the government is going to be really instrumental in providing that catalytic risk mitigating layer to not only encourage small businesses to participate and commercial banks to participate, but also eventually to get local and regional institutional investors engaged, which is the real goal here.
Yeah, let's shift then to the kind of second approach here, which is angel investing from the diaspora. So who's stepping up there to get involved?
Lucy found a couple of organizations that are setting up their own small business financing facilities. And what I thought was interesting is that she found two that are specifically focused on the diaspora community, trying to fundraise from the diaspora community to bring money back in to support local small businesses. Just as a quick rough figure, there's roughly $100 billion or so that overseas Africans send back to the continent to friends and families and communities. And so you can imagine that, of course, some of this money does support small businesses, but not in any sort of organized way. And so one of the networks that Lucy identified is the Zambia Business Angels Network. And they're trying to be a more formalized channel for diaspora members in the U.S. and Europe and elsewhere to send money home and to support small businesses. They've done something, I think, 23 deals or so in the past 5 years, to the tune of about $325,000. So we're talking really small checks here, but ones that can have a really outsized impact. Because, this is basically sort of friends and family money that a lot of entrepreneurs rely on to get their businesses off the ground, just from a much wider definition of friends and family.
Now, turning from the Diaspora Angel Network to the more of the kind of structured diaspora capital, tell us about the Africa Equity Group's Borderless Africa Fund.
Yes, that's a private credit fund. They're doing somewhat bigger checks, six million to 12 million, I believe, in each business. So that's quite much bigger when you think of 23 deals at $325,000. But that's exclusively focused on debt. But also they're reaching out through the African diaspora communities. So that's also their main source of fundraising. And so it's clear that there's an opportunity here, not just to go from, these big top-down kind of, government institutional capital initiatives, but there's also a real need for more of these, sort of bottom-up, smaller check kind of initiatives as well.
And how does this connect to broader trends that we've been seeing across the continent in Africa?
Yeah, I think this speaks to a lot of the reporting that we've been working on over the last 5-6 years, particularly, with our colleagues at the Collaborative for Frontier Finance, this network of African fund managers that are largely doing small business investing in their home markets and in a regionalized way. And over the years, as overseas money from development finance institutions, certainly, development assistance and aid has dried up. Really, the momentum now is behind rallying Africa's own wealth holders and institutional investors to engage in this core segment of the economy. And so this story just reinforces that momentum. And I thought Lucy did some really great on the ground reporting there in Lusaka to spotlight specifically, how this trend is taking shape in Zambia. So it's definitely worth a read.
All right, you can read Lucy's piece on the push to support Zambia's small and growing business on ImpactAlpha.com. There's also a link in our show notes. Later in the show, we'll discuss how Danone-backed Livelihoods landed 124 million euros for its fourth nature-based fund. But for now, we'll take a quick break. When we come back, what to make of the billions in liquidity Impact LPs have made off of SpaceX's recent IPO. Next up, some Impact LPs are set to unlock billions in liquidity as their bets on transformative companies are paying off. As our Amy Cortese reported for us this week, the recent SpaceX IPO not only minted the world's first ever trillionaire, it also generated huge returns for impact investors who had backed the spaceflight, telecommunications, and artificial intelligence company founded by Elon Musk. AI company Anthropic's upcoming IPO is expected to do the same. Two pioneering impact managers, DBL Partners and Capricorn Investment Group, were early investors in SpaceX. Several foundations that were LPs in those funds are set to see a huge windfall. Jessica, this news has generated excitement and concern among people in the impact investing market. On the positive side, several impact LPs now have liquidity to invest in new impact funds. On the negative side, there are concerns around the impact of SpaceX, especially with its governance largely controlled by Elon Musk. So Jessica, let's start by talking about the liquidity here.
Right. I think this is, as Amy put it in her story, she called it a liquidity rush. And she said that's good news, obviously, for Impact LPs, because there haven't been that many liquidity events over the past few years. And so on the plus side of this, having this enormous IPO, and actually, you didn't mention Fervo, the geothermal company that went public back in May, but also that was another big win for impact investors too. And so there's some momentum here in the IPO market, which is exciting for the impact community because now you've got these big chunks of capital coming back that can be recycled into new impact investments. So that's the good news.
That's the good news indeed, but not everybody's excited by this news, and some have concerns about the impact of a company like SpaceX.
Yeah, I think it just raises a lot of questions, right? DBL Partners and Capricorn Investments, they've been invested in SpaceX for a long time. They made their impact investments when SpaceX was building out its Starlink satellite constellation. And I think the impact thesis of that was pretty clear, right? It was the plan for Starlink. It was going to be delivering affordable, universal internet access, which I think we can all agree is pretty important for impact these days, given our ever increasing digital world, right? And so, but then of course the company has changed in that time, and now you have this big windfall, and yet I think it's reasonable to question whether or not SpaceX is still an impact company.
Well, certainly if you're talking about public markets and ESG in the public markets, from a governance standpoint, generally good governance, good corporate governance folks don't like to see concentrated governance control in the form of a special class of assets for a single investor. In this form, Elon Musk is still the vast majority controlling shareholder in the company.
Yes, and what I think this forewarns, right, is you mentioned the Anthropic IPO that's expected later this year. The Ford Foundation, Omidyar Network, Nathan Cummings Foundation, they all invested a combined $7.5 million in Anthropic with the idea, right, that impact investors need to be engaged in the artificial intelligence evolution, and particularly in those big players that have a lot of say in that. And so that makes sense, right? We can't have the impact investing community disengaging. But at the same time, we can see with SpaceX, how companies that start in one place can evolve quickly into another. And so, I think it's fair for the impact investing community to be asking these hard questions right now.
And when impact isn't always necessarily baked into the enterprise itself and is somewhat dependent on who's governing and who's owning the company.
That's right. And this is a space that we will continue to follow that debate.
All right. Well, you can read Amy's piece on the billions in liquidity for Impact LPs on ImpactAlpha.com. There's also a link in our show notes. For now, we're going to take one more break. When we come back, our Deal Spotlight looks at how Danone-backed Livelihoods Fund landed 124 million euros for its fourth nature-based fund. Finally, this week, we shine our Deal Spotlight on Livelihoods Carbon Fund, which raised 124 million euros for its fourth nature-based fund. To start us off, Jessica, who's behind this deal?
The Livelihoods Carbon Fund was an initiative of the French food giant Danone that was started back in 2011. And it was an effort for Danone, which had set its own net zero carbon targets, to bring a bunch of other companies with similar net zero carbon targets into a new financing instrument that would not only support nature restoration in communities where they're operating, but also support livelihoods in those local communities. And so they've succeeded in bringing in, Schneider Electric, Credit Agricole, Michelin, Hermes, Firmenich, a number of other big names that we would be familiar to all of us. And the milestone here is now that it's on its fourth iteration, its fourth fund, and it's closed 124 million euros of the 150 million or so that it's targeting this week.
Now, this is part of a broader trend that we've been seeing around nature-based investing. So tell us more about that approach and why that trend is on the rise.
Yes, this deal actually timed well because it came out roughly the same time that the Nature Conservancy and Forest Trends released a report on nature-based investing over the past decade. And one of the big themes actually in that report was just how much more corporations like Danone are engaging more in nature-based solutions and nature-based investing. And that sort of makes sense, right? They're doing it. Big food companies like this, their supply chains are threatened by climate change. They have these net zero carbon goals of their own, and so they're investing in these opportunities to shore up their own business operations and supplies, and then also coming up with creative mechanisms to make sure that nature is protected and conserved.
So in development finance in general, we are often talking about the kind of the gap between what's needed and what's actually financed. And in the nature-based investing gap, that's pretty big as well, right?
Yeah, the report highlights about 60 billion or so of nature-based investments that Forest Trends and the Nature Conservancy identified over the past decade. And I think about a quarter of that actually happened just last year. So it does show growth. On the other hand, there's something like 700 billion a year that's needed to restore and protect natural ecosystems. And so that's quite a big gap if you go from 60 billion over a decade to 700 billion needed every year.
Right, but the volume of capital is increasing as institutional investors are plugging into this market, and market is becoming a little bit more mature, and there are more ways for institutional investors to plug in and have their capital deployed in this way.
The volume is increasing. Yes, that's true. I think what actually really stood out to both me and Eric, who reported this story, is that not only is the volume ticking up, but actually design of nature-based investments is changing. So one of the things that the report calls out is how it's being designed with multiple revenue streams in mind. And I think what that reflects is that investors are actually coming to terms with the reality of natural cycles, right? So, you're not likely going to get a 10x return or a 5-year exit on a mangrove restoration. And so by designing around different income streams, say, if you're a timberland developer, you're getting income from the sustainable timber that you're harvesting. Maybe you're also doing carbon credits. You're getting money in to support your investors and also incentivize them to stay committed for these longer periods of time while nature does its work. And I think that is a promising trend. It just demonstrates a more symbiotic relationship between capital and nature than what we've seen historically.
Well, I'm here in Madrid as part of this big European heat wave that's happening right now. So these kind of nature-based solutions can't come soon enough.
Indeed.
All right, to go deeper on this deal, there's a link in our show notes to the Livelihoods Carbon Fund profile on ImpactAlpha Edge, our data intelligence platform that contains the most comprehensive database of impact investors in the world. You'll find thousands of LP and GP live profiles detailing allocations, funds, asset classes, geographies, investment focus, and key decision makers. But that's going to do it for this episode of This Week in Impact. Thank you for joining me today, Jessica.
Thanks a lot, Brian. It's been fun.
And thank you all for listening. This Week in Impact is a production of ImpactAlpha and part of the ImpactAlpha podcast network. Smart conversations by and for impact investing professionals. For exclusive stories and insights about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks as always to our producer extraordinaire, Isaac Silk. For Jessica Pothering, I'm Brian Walsh, Managing Director of the impact advisory firm Human Nature. We'll see you next week for more Impact.